So just want to do a quick introduction, and then I'd like to have Chad Moore just say a couple of words. And so the intent of the webinar was, one, training for our Native American business advisors and others that are providing technical assistance to our Indian equity applicants, and really raise the level of our expertise. And that's the whole point. What we plan to do is, when the webinar is completed, this is a permanent webinar, the questions will be included. And so this will be permanently on our web page. So when people are doing applications for Indian Equity Fund, they'll be able to link into the webinar and use it for their applications, but also the Native American business advisors. You'll have a support piece document that you can use whenever you need to. So I just want to do a quick summary, and I wrote this a couple of weeks ago just on why, in my mind, the cash flow document is so important. I just want to reiterate that, and then I'm going to ask Chad to say a few words, and then we'll let Joe jump into it. So the cash flow document, in many ways, is the critical piece of the Indian Equity Fund application. And it is so important that the applicant create a cash flow that reflects in detail the project or the business. Often when someone hears a person say they want to start a business or grow a business, the first response is, you need a business plan. Yet when we talk with most successful business owners, they will tell you they never wrote a business plan. This is a conversation we could discuss endlessly, but let me suggest, again, why the cash flow is critical. The short answer is the cash flow document you're creating for your business is your business plan. If you have a comprehensive cash flow document, which Joe will describe in the next few minutes, your applicant will have both a cash flow document and the core information you need for the remainder of your application. When you understand the underlying meaning of each line item of your costs and your sales, you will understand how your business will get from today to profitability or failure. So that's our piece in terms of how vital this piece of information is. And so, Chad, if you want to say just a few words, that would be great.
Yeah, so like you just mentioned, it's extremely important for business owners, regardless if they're applying for the Indian Equity Grant or starting a business without that, to understand the cash flow of their business, and understand if they're going to be making any money. Obviously, it's important to be realistic as possible, and I think Joe might touch a little bit on, a research tool, too, that can help you look into some of this, and I know we discussed this very briefly, but something that you guys may want to look into adopting as well, just to give you more realistic expectations and the business owner more realistic expectations. But really, this is more for the business owner to understand, hey, am I going to be able to make any money at this? And what the beauty about this cash flow sheet is, it gives you a lot of options to play around with stuff. For example, if the business owner starts off the business initially and isn't able to pay him or herself, but there may be an option down the line, it shows you, hey, where are we at and what does it look like and what might I be able to pay myself in the future. It accounts for seasonality, and like I said, it's just really important to be realistic. For example, you guys deal with a lot of seasonal businesses where the busy time is going to be in the summer. Obviously, that's where they're going to be raising the most capital and the most sales. And it's important for the business owner to understand that. I know this was a hot topic when we were looking at the Indian Equity Grants this year, and it just gives you and them a little more, a lot better understanding of how this coordinates in with the narrative portion of their business plan. So making sure that their narrative portion is lining up with their cash flow and their financial statements. Obviously, if those are together and they're realistic, and even in some cases, even if you can bring those down below where you realistically think they may be, and their business plan still looks good and they still are cash flowing, then obviously the better they do, the more money they're going to make. And so it's just important to say, hey, yeah, I think this is viable. or to say, no, I don't think this is viable, and this document and the financials will tell you that. So that's why this is extremely important. And you know, it's something that we've been doing for a while, and the sheet obviously is transformed over the years, but I think it's in a pretty good place right now. So I'll go ahead and let Joe take it over. I hope I didn't steal any of his thunder. Obviously, he's going to be talking about some of this stuff as well, but thanks, Joe.
Thank you, Chad. So everyone can hear me and see the cash flow projection up on there, correct?
Yeah.
Okay, first time I've ever taken and ran with a webinar, so hopefully it all works out. So like Chad and Philip said, so the cash flow is the lifeline of your business. If you're applying for financing either through a grant or a loan, the cash flow shows the success the business can achieve. And that is why the financial projections are a key driver to obtain financing. I know here at Bear Paw with our loan committee members just really look at the financial projections more so than the business plan, like Philip said. So I created this short little exercise for us to go through a simple cash flow projection spreadsheet. And keep in mind that this is the Indian Equity Fund spreadsheet that the state uses. There are other financial projection spreadsheets out there also, but we'll be using the official one for the Indian Equity Fund today. And did everyone receive the assumptions page I emailed a little earlier today for the narrative? It should look like got it. This is what I'll be reading off of. If you didn't, just let me know, but I can periodically go back to each screen. So Sarah had a passion for owning her own food trailer and was going to apply for an Indian Equity Fund grant. She found a trailer for $10,000 and will spend $4,000 for food inventory. She has her business plan and needs assistance in preparing cash flows for the first 3 years to find out if the operation is profitable. Please use the following information so we can assist Sarah in the preparation of the attached cash flow worksheets. And there is also an assumptions page on the worksheet in the Excel file if you want to explain how you came up with your calculations and formulas. So to start off, so Sarah, again, plans to apply for a $14,000 Indian Equity Fund grant, $10,000 for the trailer, $4,000 for food inventory. If awarded, she plans to open in March 2020, and she already owns a pickup truck, so she'll need no additional financing on this projection example. And she will not be open in the winter months, November through February. And Sarah assumes that she will go to 15 events per month, and she plans to sell 65 entrees at each event at an average retail cost of $10.50. And so how I will demonstrate and calculate the projection for sales is I always like to come and type down below for my assumptions page, so if the sales or price changes, we can easily update the cash flow projection spreadsheet. So start off by typing, can everyone see that okay? There we go, events, so she plans to go to 15 events per month and sell 65 entrees at an average price of $10.50. And how Sarah arrived at the $10.50 is she took her plate of food, costed out each item that is on the plate, and then times it by 3. And the reason she times it by 3 is it will cover, a third covers overhead, a third covers food costs, and a third covers general operating expenses. And that's just a general restaurant rule of thumb that they do in their food industry. So to get total sales, again, I would take the 15 events times the 65 entrees times the $10.50. So we get a total sales of $10,238. So again, she's going to start in March 2020. So cash sales, I'll create a formula by creating the equals and coming down to sales, and then I'll hit F4. So it makes it permanent, so that's always going to feed off that cell. So then you can always just go ahead up and drag it across. Give me 1 second. Sorry about that. But sorry, I drag it a little too far. So does everyone see how to calculate sales? Are there any questions on how to figure out sales or how I obtained that method?
Click on that chat.
Joe, you drug that across into November and December, and I think those are not working months.
Yep, there we go. Thank you. Thanks for that. So Sarah assumes she's going to sell $10,238 per month. And cost of goods sold are based on industry standards, so at 40%. And I'll just pull up the website. So at the SBDC, we have profit cents, and industry standards are RMA data. They compile a lot of research to get the average cost of goods sold. And we did a mobile food industry, and it always bases on your NAICS code. So you can scroll down and you can see that the average cost of goods sold for all years is 39.77%. So this is a justifiable expense, and you cannot really go wrong by using this, and it's not an estimate, so it's an actual expense. So I'll go cost of goods sold at 40%. And they do vary by industry, and it's going to be a percentage of sales. That way, if your sales increases, you're always going to have enough money to repurchase your food, so you will not run low. And on this worksheet, it's under purchases/inventory. So I'll take our sales times our cost of goods sold, which is 40%. Again, I'll hit F4. And so our cost of goods sold are going to be $4,095 when we're open and operating. And Sarah, are there any questions on cost of goods sold? Perfect. Sarah plans to hire one employee at the minimum wage for Montana, which is $8.50 per hour, and that employee is going to be working 45 hours per month during the operating season. So the employee is going to get paid $8.50, which is going to work 45 hours per month for a total wage of $300. Oops, sorry about that. $383 per month for the employee's wages. And so then the payroll taxes are figured at 30%, which is the average that we use here at Bearpaw, and that covers all the taxes, Medicaid, Medicare, Social Security, federal withholdings. So we'll come down and do payroll taxes or expenses. At 30%. That's going to be off the employee's wages. So Sarah will have to pay $115 for the employee's monthly wages for the cover the payroll expenses. And during the operating season, office supplies are 3% of sales. So I'll come and I'll just type out supplies, 0.03. Repairs are 0.024% of sales. Utilities are 0.04%. And professional fees are 0.02% of. And everything everything is based off sales again. So if your sales increase, all of these fees will increase as well.
So Joe, this is Philip. So are those percentages based on the RMA assumption with this particular kind of business?
Yes, they are. And utilities, since she's a mobile food trailer, basically her utilities are just going to be fuel to run the generator and propane.
Oh, okay.
So now we've figured out her utilities, costs, supplies, repairs and maintenance, and professional fees. Then she just plans to advertise $20 a month on social media. You can just go ahead and type in $20 per month for advertising.
20 a month?
This is just an example too. Okay. Phone and internet is calculated $100 per month. That's basically a cell phone.
I think my advertising is just pretty cards.
But even that, you have to figure out the cost.
Is there a question or?
Yeah.
So just scroll down to Charlene or up.
Accounting is $35 per month, and that's just to do general accounting with an accountant if they want to process payroll. And that is based on a real quote that we obtained. And then miscellaneous expense is $50 per month, and that covers any vendor fees that she has to pay and or licenses. Are there any questions with those expenses?
How did you arrive at the advertising expense, Joe?
That was just a rough estimate that we worked with Sarah on. And we looked at social media and just reached her market, and being in Havre, if you're in a larger city, you're going to spend a lot more on advertising, but being in a rural area, such as Havre is what we base this on, it's word of mouth. And you can park on Main Street at a local brewery or in front of a store, and people will see you for virtually no cost. Plus, I actually talked with another food truck vendor here in town, and that's roughly what they spend per month on advertising. How we arrived at that.
Hey, Joe, where'd you get your real-time or your real cost for accounting and legal? Where did you get that
was
from?
AZ,
Okay.
local accounting firm here in town. And that's just strictly to do monthly payroll, not to do taxes, any of that. That's just payroll. So Sarah doesn't have to do payroll herself.
Oh, I see.
Yep. And then insurance is quoted at $720 per year. It's equally divided. And that's going to begin in March, but it's for the first 10 years of the month, so $72 per month is what she'll spend in insurance starting in March. We did get a quote up at Baldwin for this. And that's what I recommend when you are working with clients. Have them get actual quotes and go out to the various vendors or providers, and they will provide them the quote so you can use actual numbers, justifiable numbers. And credit card fees are 3% of sales. And that's the average rate using Square or for a similar service. And during the operating season, Sarah plans to drive 400 miles to reach her various events and also obtain food. Going to use the federal rate at 58 cents per mile. So again, that's a justifiable number that really can't be questioned, is at the 58 cents. And the way we built the spreadsheet, so if she drives more than 400 miles, it's going to automatically update. And that rate does change every few years. So always look to see what the current rate is.
Excuse me, Joe.
Yes, go ahead.
This is Shelley Vasu. I had a question for you regarding insurance.
Yep.
What exactly is that insurance for? Is that insurance for her inventory, or is that insurance for her trailer, or is that like her
Trailer
own
and general operating insurance in case someone gets sick from eating at her food cart.
like liability? What do you guys do? Do you consider like employee insurance or employee? I guess that's what you call it, right? Employee insurance. Like if she had hired someone to work with her.
Like health insurance or what type?
No, like unemployment.
Yep, that's covered underneath payroll expenses.
Federal?
That's yeah.
Okay. What if her employer gets hurt? What if your employee gets hurt on the job?
That would be workers' compensation, and that would be an additional insurance that you would need to take out.
Okay.
Is that part of the 30% of payroll, Joe?
Well, it's 14.14, but no, it's hard to justify. We'd have to get a quote based on the industry, so that is not included in the payroll expenses for this exercise.
This is Matt. I did have a question on the payroll expense. I remember doing a training in billings, and we were told to do like 10.2. Where am I getting that percentage from for the payroll expense? And
1.17. It's roughly 26%, 28% when you add it all up. So all your withholdings for the employee and for the business. Because it's virtually double, because they have to withhold the employee's taxes, and then the business owner has to pay taxes also on the same payroll expense.
Right, but if you're holding the employee's taxes, it will still, you won't have to pay it, right? Or, I mean, you're not actually paying them $8.50 an hour.
You cut out. I couldn't quite hear that.
Right. If you're withholding for your employee, you're not actually paying them $8.50 an hour, right?
They're getting paid $8.50 an hour, but in reality, it's just like when I'm making $20 an hour here, and my take-home pay is a lot less because I pay taxes, but then Veripaw's responsible for the same share of taxes too.
Right, that's for your FICA and Medicaid.
Yep, and Social Security, withholding, unemployment, yeah. So virtually double. So you had said it was about 14%, so yeah, roughly 28.
Okay.
Right, and I can get clarification on that too down the road if needed. And Sarah plans to take a draw of $9,000 per year.
$9,000 draw.
Yep.
And
that's going to start too when she's in business. So.
What does draw mean? What do you mean by draw?
It's going to be what Sarah takes out per month to live on to pay her own expenses. So basically, she's paying herself an owner's draw.
Okay. Okay.
And sometimes business owners can't afford to take out a draw for the first few years of operating, but in this case, she can.
Which is different than paying yourself as an employee.
Yep. So since she's a limited liability company, she can either pay herself as an employee or take as owner's draw. And what I usually do is, if she's going to take an owner's draw, I usually will tell the client to set aside, again, 28 to 30% of that draw into a savings account, because she's going to have to pay taxes on that too at the end of the year.
Okay.
Just like an employee would. Or she can be counted as an employee and pay the taxes as she pays herself throughout the months. More questions on that? Perfect. For years 2 and 3, and what I like about this spreadsheet is it makes your increase in sales and expenses virtually quick and easy. You don't really have to do much because it's all built in. So year 2 expenses are going to increase 4%. Year 3 expenses are going to increase 4%, or I mean sales, and expenses are going to increase 3%. And so, but now Sarah wants to increase her draw by 10% in years 2 and 3. So I'll go to your 2021 and take 9,000 times 1.10. To get your $9,900, and I'll do the same in years 2022. To get $10,890. Are there any questions on increasing your owner's draw 10%? Okay. And I do want to highlight also on this spreadsheet, say she did need a $5,000 loan to purchase the trailer or get the trailer updated. So you can use the assumption amortization table and it will carry forward. And so she'll need a $5,000 loan. At the average interest rate now, it's about 7.5%. Since she's buying equipment, 7 years is good term for useful life, and 12 payments per year. So her average payment will be $76.69. And as you go back to year 1 cash flow, now you can see that the loan payment is in there and has started for $77. And the way it's built into this spreadsheet, it's going to
I had a question.
carry it forward. Go ahead.
Regarding the inflation increase of 3% per year, that only affects the items that are not tied to sales, right? Like cost of goods would still be, it would increase 40% with sales, or 4% with sales, because it's tied to
It's
sales.
actually, in this spreadsheet, it's actually putting a 3% inflation on cost of goods sold too. But cost of goods sold are virtually still 40%, but it's going to inflate the food cost 3%. If that makes sense.
Yeah, that would actually reduce it below 40%.
Actually, it's not affecting purchases, so no, it's stuck at 40% of sales. And if not, you can always just come up to your total sales times your cost of goods sold at 40% again.
Right.
Get your actual. And that's probably what I would actually do, just so it's linked correctly.
Yep.
So that is all I have for this exercise. I can open it up to any questions you may have.
Cool.
Yeah, Joe, this is Philip, and this is a question just a bit out of scope, but if you were advising this client and you looked at the amount of cash they need to start the business and get it rolling, I mean, your expenses may, of course, accumulate faster than your sales. Do you have a way of looking at the cash flow document, estimating the amount of cash you're going to need to when you start the business?
So can you say that again, Philip? I'm not
So
sure.
my question is, when you start this business and get it rolling, you're going to need some cash. What's the total amount of cash you're going to need?
Oh, for like food and workers or operating expenses?
Yeah, exactly, for operating dollars.
We'd have to sit down and work a different spreadsheet. I would work with the client a different spreadsheet to see how much miles she needs for fuel. But the way we base this case is it's turnkey. So virtually the 4,000, we'd have to sit down and see how much additional operating dollars she would need. Because she would need fuel and down payment on that expenses. Basically it would be your first year's expense. Your first purchase expenses minus the cost of goods sold. Because that's covered underneath the grant for the $4,000 for the first month's operating. So be the 382, the 204, the 307, $20 for advertising, mileage, $232 for travel, counting legal, $35 would be her additional operating she would need to begin with. Would be that first month.
So I have a question. So she's applied for the Indian Equity Fund, and we're assuming that she did. Where is that reflected? Where is the grant reflected in this spreadsheet?
Basically, if she gets it, it would be under your projected beginning cash. You would be, okay, so say she got the $10,000 for the trailer.
Uh-huh.
You'd put $10,000 in for loan or other cash injection. And then capital purchases would be $10,000. So virtually it's going in, coming out. So you can include that, but you don't need to because it's money going in and coming right back out of the business.
Mm-hmm. And so the same thing with the 4,000 then, the additional 4,000.
So say she got the full grant, you put 14,000 here and put, and then purchase would be beginning food right there. So it's 14,000 going in, 14,000 coming out.
That would take care of some of the startup costs with purchases of inventory and things like that, right, Jill? So if you want to put that in there and show that is her beginning costs and her startup costs, obviously, to take place of that $14,000 Indian Equity Grant. But like Joe said, it's in and out. So really what you want to be careful of is putting that Indian Equity Grant up there. And then at the end of the day, when you see her cash position at the end of the year, and if her cash position at the end of the year is $10,000, that means she lost $4,000. That means she's not actually making any money whatsoever. So you just want to be careful of that. And I've seen that on some of the spreadsheets where their beginning cash looks great, right? But their ending cash is lower than their beginning cash, which means they're not making any money monthly.
Okay. So when you look at this spreadsheet and the cash position, this is where we can determine if they're actually making money. Are they making money? And so obviously, I'm assuming this means that they're making money.
Sarah's making $2,762 per month when she's open.
Okay.
And that's after she's paying herself.
Yes.
That's with just the draw, right? It's not really paying herself, it's the draw, which is different, right?
Well, the draw is paying herself. It's just taking it out in a different manner.
Then you can go to the second tab, which is a 3-year cash flow summary. And at the bottom, you can definitely see that she's making $20,151 the first year. And then that $20,151 carries over to make a profit of $40,771 the second year.
Hey,
Up
Joe,
here
can
you
you
can see
scroll
where
down
the
just a
beginning
little bit?
cash position carries over to be the beginning cash of the following year. That's how that summary works.
Joe, can you scroll down just a little bit so you can see that cash flow position in the graph
Yep. It's just taking these numbers right here and putting into a graph format.
Nice.
Joe, can you see the chat space on your screen? There's a question on the chat from Jen Perry.
Oh, yep.
Yeah, and I'm here. So I wanted to ask how you would use that cash flow Excel to identify timings for bridge financing. My experience with entrepreneurs is it ebbs and flows dramatically in that first year. And even if they have an Indian equity grant or award, they're still going to need bootstrap or supplemental funding. So how would you use that? How would you reflect that in your Excel?
Like I said, I would take all of these, which adds up to roughly $2,430, and I would try to obtain or get additional funding because that's what she would need for the first month.
Yeah.
And if she obtains that, she should be okay to keep operating. Did that answer your question, Zen?
Yeah, like I know the technicalities of the Excel, but I'm also thinking about some contingency Excels so that the entrepreneur can actually reflect, when things don't quite meet projection, and then if they exceed projection.
That's where you can go down and also just figure out your break even.
Yeah.
So say they're only able to sell 45 entrees. She's still being able to cash flow. And that's where I would just use the different scenarios of worst case, best case, and base case scenario with the client to show what she'll have to do. Otherwise, it's pretty hard to tell until they get out there and what the contingency percentage should be.
Yep.
I know, say, construction projects, they usually do a 10% contingency of the total sales. So in that case, she would need probably $8,000 if she's estimating 65 entrees per month for 81,900 sales. So I would say $8,000 contingency.
Yep. The other question I had is I can't read the tab names at the bottom of the Excel, probably because I'm on a smallish device. What are the other tabs?
So it's 1 year monthly cash flow, 3-year cash flow, 3-year income statement, pro forma balance sheet, and these you'd have to go and fill them out with the client also. So say she bought her vehicle, food trailer for $10,000, you would need to put in $10,000 on the pro forma balance sheet. And it is carrying over the cash, but then she doesn't have any long-term liabilities, so her balance sheet net worth would be $30,152.
Yep.
And then you have your break even, which you would have to work through your client on that tab. The personal budget, you sit down with them and how much money they will need. And this goes good with the cash flow because they can sit down and see how much money they actually need to live on and operate on, and that will go over to the owner's draw.
Yeah.
Then again, you have your assumptions tab, which is almost what I did on the year one cash flow right here, how we arrived at the numbers. You can just put it in sentence format. Sales projection.
Yep.
Fill out. Then you have personal financial statement again, and this is required for the Indian Equity Fund recipients. Then you have your amortization table. That is if they're going to seek a loan, and if the business can afford the loan. Then your socials and uses statement. So this is another sheet that's sent in with the Indian Equity Fund, as you know, and that's just
the cells
14,000, 14,000.
Yeah, sorry to interrupt. Are the cells linked, or is this plug and play?
Majority of them are linked in the first 4 tabs, but starting with the break even, it's just having to refill it out in personal budget.
Okay, thanks.
The amortization table is linked, however.
Oh, okay. Thank you.
Also, I would add in when you're putting your applications together for the Indian Equity Fund, fill out that assumption sheet line by line, it really gives us a real good sense of the thinking that went into these numbers. So I really advise you to take a look at that sheet as well.
Can you show that sheet, Joe?
And that's like, okay, purchase inventory. We would put there, I came up with 40% cost of goods sold based on the percentage of sales through industry standards or RMA data. That's a justifiable, and it shows you directly how you got that, and you didn't per se estimate that number. And like car delivery and travel, I plan to drive 400 miles utilizing the federal rate, which is 58 cents per mile. So again, it's a justifiable number, and you estimated the miles, but not the amount that you would spend.
So Joe, can you walk us through that purchases and inventory, how you get that information again?
Okay.
I'm an adult learner. Yeah, just need to see it a couple more times.
Is that okay, Philip, if I do that?
For sure.
So all the SBDCs have access to a program called Profit Sense. And
okay, so we're not an SBDC. So
yep,
how would?
But if you need to, you can always just call your local one, and we're happy to provide that for you. Correct,
okay.
Chad?
What's that? I'm sorry.
So if they need like RMA data, can we provide that to them?
Yeah, if they have a client that's requesting certain information, we could get RMA data, I think, through IBIS, right?
IBIS or Profit Sense, yeah.
Profit Sense, yeah.
Yep.
Yeah,
and,
we get that all the time from the local SBDC.
Yep, you do?
Yeah, we get the IBIS World reports and the RMA report, both from the local SBDC. All we have to have is the NAICS code.
Yep.
Who is talking?
So right now, I went in the Profit Sense, and the NAICS code for mobile food services is 722330. And we can do it by regions or states. What I do, all sales range, no filters, just to get a true report, more feedback, and more businesses entered. And so then it spits out the industry standard ratios, RMA data. I just scroll down and I see cost of goods sold, and the average all years was 39.77%.
Okay.
That's how I got that number.
Okay. So I just want to be clear. This is Charlene. So if we're looking for this information, we would just call the the small business accounts, whatever they're called, in billings, or could we call NADC? Tim, are you there?
I'm here, but I'm not an SBDC, so I don't have access to that information either.
Okay, so we would just call the one in billings.
Yep. Billings, or you can email them, shoot me an email, yeah. Because it takes, if you have the NAICS code for us, we can pull it up in 2 minutes.
Okay. All right. Thank you.
Yep. And there are different ways to get cost of goods sold. You can sit down, and it's more time consuming, but you can go through everything she will need to operate that business. So food containers, food, napkins, everything it would take, but it would take a lot more time.
Okay.
So you can do it that way also without the RMA data, industry standards.
Yeah. And Charlene, what you might think about too when you're looking at percentages, if you're getting that information, you should also, as that alternative, is have the client work through the actual numbers. The key piece here is that the business owner understands their business, and you can certainly get a lot from a percentage, but the reality is you should know what your actual costs are. You don't have to think about that every day, but at least at some point in the process, you should really look at hard numbers in terms of what you're doing as the business owner.
And I usually have my clients go through a written cost estimate, and that is everything that they need to operate their business and get estimates on that.
The percentages are a good, starting point, or a good rule of thumb, but I always say to clients that, that's C-grade students, so these are averages. So that doesn't necessarily mean, for example, let's say this food truck, for example, wanted to source all local foods, right? So their food costs actually might go up a little bit higher and be a little bit more. And then that's where they're building the relationships with some of these food suppliers, right? And some of the possible vendors. And so they need to understand that side of it too, is where are they getting their food from? It's easy to plug in these percentages and say, well, this is where it should be, but it's important to go through the process to understand that this is where I can be. And there's also the ability to beat those percentages as well, depending on where they're getting that from. I don't know if that percentage necessarily deals with spoilage either. A lot of times it does, but I don't know if that's figuring in, okay, well, if I only get 65 or 45 events or whatever that might be, I'm going to have some food in my inventory that I bought for 65 events. How much of that is going to be able to be carried over to these other events, right? So there's things within this that need to be figured out, but this is a good rule of thumb, a good opportunity to get out there and get some general numbers around it.
So one thing that my question is, depending on which industry you're in, apparently there's acceptable percentages. And so if we apply that 40% to every single business that comes into our door, that's probably not accurate. And so I guess that's my question is, how do we even, so for those of us who are NABAs that don't have the business background other than the actual day-to-day stuff, it'd be nice to be able to kind of have some type of benchmark that we're shooting for. Because, maybe the grocery industry is different than the food cart industry.
Yeah,
and so
that's kind of what Joe's saying. So with Profit Sense and with iBiz World, for example, that we pay for those subscriptions, we can get that RMA data that will give us the percentages based on the industry NAICS code, right? So if you know what the NAICS code is for the industry, reach out to our local SBDC centers and just say, hey, it was mentioned in our meeting, in our Cashflow meeting, that you guys have access to some of these tools and that we should reach out to you guys. And then work on building that relationship with the local SBDCs, right? Because they can be a really good help for you guys, just even in supplying some information for you. And so there's an opportunity there to do that. But yeah, we have access to those databases. So for example, like you said, the industry, like for example, manufacturing, the costs are going to be a lot different than food industries and different industries. So just understanding what the NAICS code is, which can sometimes actually be a little bit difficult as well, depending on how deep within the NAICS code it actually is. But
yeah, there's if you Google NAICS code lookup online, you can get to the federal NAICS code lookup online tool.
Yeah.
And so what I just did is I just pulled a gas station and convenience store, and as you can see, their cost of goods sold is roughly 88%. So it's a lot higher based on their NAICS code.
Right. And so exactly, so that's kind of what I wanted to know is just being able to provide some guidance to someone who's running a gas station. So would we be shooting, it would be, you're kind of setting your people up for failure if you're going, well, it's 40%, you need to get it to 40%. And so anyway, so that's helpful. Thank you.
Yeah.
Hey, Joe, this is
Shirley, Heather, go ahead.
Okay. Can you go back? Yeah, go back to the cash flow statement. So if I hear you correctly, the sales projections tab is not linked to the 1-year cash flow tab?
Sales projection. It appears not to be.
So you got to make sure you're obviously linking. You have to understand that the sales projection tab here has to correlate with your 1-year cash flow, because you talk about your revenue, in a cash flow statement, has your, monthly revenue, but that has to also match up with what you're putting down in your sales projections.
Yes. Yep.
So,
exactly.
And then on this tab, the cash flow tab, there's no way. Is there a way to show fluctuations in sales according to months? Because like in sales projections, depending on the business, obviously there could be seasonal ebbs and flows. So on this,
what you would do is, so say she opened in November for 1 month, but in November she was only going to sell 25 and attend 2 events. And that's just stuff you'd have to work through with the client, just use estimations. And then, so she's only bringing $525. So then I would just link that 525 to show the seasonality of the business.
Okay, so can you have different? So can you show different revenue based on month?
Yep. It's just
Oh.
different formulas that you need to type in, but yeah. So right here, yep, November drops down to 525 per month. Cost of goods sold are 210.
Okay.
You can manually put numbers into those, right? So you can put them down that, and for example, in April, maybe it's a little slower or something like that. So maybe she thinks she's only going to do 30 events. So you do the 30 events and you just multiply the 30. What Joe's doing is he's just making it easier, putting the assumptions down at the bottom. Basically he can tie in with the formula up top. You don't necessarily need to do that, but it's just as long as you're writing down your assumptions on the assumptions page. It says, in April she thinks she'll do 30 events. In May she feels like she's going to do 60 events. In June she's going to do 70 events because there's certain things that are happening in her region or something like that. And you can go in there and adjust all of that stuff, and it'll show it. It'll show that on the cash flow. Obviously, that's what the importance of this tool is it's showing you actual cash, right? It's showing you sales in and money going in and money going out.
Right.
Cash.
And then, because on the sales projections tab, because I didn't get a chance to take a good look at it, but can you also put in your basic assumptions like units sold per month based on price and all that good stuff?
Yep, on the sales projection tab you can. And it's like, say she offered 5 different products, you can break that down for the total different products that she sells.
Okay, so basically I can just do this tab and then take
and
the
then
total
link this.
and then bring it over to the 1-year cash flow statement.
Exactly.
It's almost like redoing work if I put the formulas in the 1-year cash flow statement if it's already here in the sales projections tab.
Yeah.
Okay.
One thing to watch for is with the wages, if you are going to adjust your sales for only going to 10 events, your wages would change. It seems like there's kind of a red flag there at only having 45 hours a month, so that basically equates to, with 15 events, 3 hours per event that your employee is working. I think as an underwriter, I'd be a little bit concerned about that. But also, if you decide that they're going to project only 10 events, your wages would need to reflect that as well, along with your payroll expenses.
Yep, and exactly, and that's what I would do in the assumptions tab. So say November, there's only 2 events, so I would just create a formula, then the payroll would reflect that in the spreadsheet.
Gotcha. And on can you go to the 3-year cash flow?
Yep.
Tab? You had mentioned so the cash position at the bottom, the first year was 20,000 and change, and you said that was what would be paying the owner. Is that the owner's draw?
The 20,476.
Yeah.
Virtually at the end of the year, if she's an LLC, yes, that would be considered owner's draw, and she'd be paying taxes on that also.
Okay. Because in the second year you said $41,000 in profit. That's that.
Sorry, go ahead.
That second year you said it shows $41,000 in profit, but don't you have to take the draw
money.
too?
So in reality, it's 41,000 minus the first year, so 20,946.
Okay, gotcha. Okay, got it.
That's your cash position, not your profit.
Yeah, that's not your net profit.
Right.
Your net profit will be on the income statement projection.
Yep. Okay.
Something, I would have to look at this. Not flowing through correctly.
On your income statement, you do have a projection for taxes, and you can put that also into your cash flow statement.
Exactly. Okay. Go ahead, Chad. Did you have a question?
Yeah, well, I was just going to request if you would be willing to be kind of the point person on some of this, some of the RMA data and stuff for the NABA network. if we can work together, obviously, with the network, to help them understand, when the NABAs reach out for this type of information to make sure that they're getting it, but maybe having you as sort of a point person, and they can maybe CC you on some of the communications to make sure that we're getting that communication back and forth.
Yes, I can definitely do that.
Okay, I appreciate it.
And feel free, if you have more questions on this, give me a call, because I use this one for the NABA program, but then we have a different spreadsheet too, so I've done quite a few different projection spreadsheets, more in depth, so don't hesitate to give me a call or email questions.
What's your number?
It's 406-265-9226.
We're gonna hang it on our wall.
Okay.
Real big letters.
All right with me.
Hey, Nabas, this is Heather in Helena. I think another good point to make is that if, Philip and I were visiting as the webinar was going on, and we know that there needs to be some follow-up training that happens for you guys as well. So let us know questions that you have from this training and additional training that you'd like to see that we can deliver in a webinar format so that we can, make sure that it's available on the website if you have questions. And then, we'll really try to start to put together those resources for you so that you are better equipped to answer questions in real time, or really look at finding solutions in real time for yourselves rather than kind of waiting for us to post something. So.
And another thing too to look at is the SBDC website. On our SBDC website, we've got some resources under there as well, but we do monthly webinars on different topics, and they're short webinars, but it's an opportunity. I've even sat in on some because there's a lot of things that I can learn from them as well. And there's just an opportunity to maybe sit through some of those. You can either watch them live or they're recorded and they're on there 24/7. So whenever you guys want to go on there, you just go to sbdc.gov and you can get on to the website and find under our classroom page all those recorded webinars, and then you can see when the next live webinars are coming up too. What's nice about the live webinars is that you can actually participate and ask questions. But they're recorded on there, and there's some really, really valuable information on there, not only from the client standpoint, but for us practitioners as well.
Good. So this is Charlene. So I would recommend for either to be included in this training if we have time to cover and are prepared to, or in future trainings. I'd like to, if it'd be great if you could review completing each of the required forms for the Indian Equity Fund. So personal financial, I don't think that was required last year, but is it going to be required this year? And I think there was one more that needed to get, that was
sources and uses.
Yes, that one. So if we could, it'd be nice if we could just kind of review that right now, just so that we are able to walk our clients through this information. So, and of course, we want to make sure that as we move forward, that we help our clients be as successful as possible. So if we are informed, then we can help them be more successful in not only obtaining the funds, but in their business. So anyway, just suggestions. If we could review it today, that would be great. If not, then I'd like to make sure that we review it in the future.
We will.
Okay.
For sure, Charlene. I think what, Heather mentioned that we're thinking about additional training. I think what I'll do in the next few days is actually send out a document to all of you who are on the call and do a review of the topics and get feedback on particular topics. And at the same time, when we do that, we can get the required forms out there for Indian Equity Fund. So that's clear for you.
Okay.
I have a question. This is Rose. Is this recording how will we be able to access it if we want to review?
So this recording will be on on our web page. So when you go into the Indian Equity Fund application page, there's a piece in there where there's links, and so it'll be on that link page where you can go in and it'll be available, 24/7.
Okay.
Indian Equity Fund or NADA?
That's on the Indian Equity Fund page. We want this to be available for the NAVAs and also for the Indian Equity Fund applicants as well,
Okay.
or anyone that wants to go to the web page, actually.
Good.
So any further questions or thoughts? Okay. Well, let's call that a wrap here and close it off. I just again want to say thank you very much for all the questions, really, and thanks for the thoughts as well. And then Joe, just kind of a round of applause if we can do that on a webinar. I'm not sure, but thanks again, Joe, for your work. Really, really do appreciate it.
Thank
So
you.
that's all.
Thank you, Joe.
Thank you.
Thanks.
Joe.
Thank you.
Thanks.
No problem.
We'll be bothering you.
Yeah.
All right. Goodbye, everyone.
Bye-bye.
Thank you. Thanks, everybody. Bye-bye.
Bye, Heather. It is.